Welcome viewers. Hopefully all of our Kiwanians just very carefully transitioned from our afternoon Zoom meeting to our program for the day. So we're super excited. We're trying something different. For those of you who are viewing who are not regular Kiwanians, every Tuesday, years, the Braden and Kiwanis Club has met, and our normal routine has been changed up a little during the pandemic. And so every week we're trying something a little new. And so what we're doing today is we want to share our program with you. Instead of somebody just talking into a screen and maybe sharing a PowerPoint, we decided to change it up a little, and we're going to interview our program. And so hopefully Mr. Sherod doesn't feel like he's in the hot seat, but maybe a little uneasiness will be good. It'll be interactive and fun for our audience members. You know, technology's been awesome during this pandemic, so we're able to experiment. We really appreciate you coming and talking to the Kiwanians and other guests who are viewing so that we can hear more about what you're doing as the president and CEO of Manatee Community Federal Credit Union, affected by the pandemic, and how you're still persevering. So for our audience members, I know the very first question everybody wants to know, you know, and as I have talked to people and they're like, are you going to ask him, are you going to ask him? So I'm going to ask you, is there really a coin shortage?
So we're going to go there.
Yes.
First question.
Yes. Okay.
Yes, there really is a coin shortage. I would characterize it as more of a temporary disruption. The pandemic has impacted almost every aspect of our lives. And when you think about it, there are businesses that circulate coins in our community that are no longer active. People are not going to laundromats.
Okay.
And so you have a lot of these businesses that circulate coins, they're no longer active. As a result of, you have the mint that makes the decision that they don't need to produce as many coins because the businesses that circulate these coins are not active. So they cut back hours on their employees, and now there aren't as many coins in circulation. From a micro level, I look at the credit union. We have a coin machine. Well, our doors are closed. And so normally we would circulate coins from the community with people coming in utilizing the coin machine. Well, they can't come in. So on all these different levels, you know, access to circulating coins and getting them into the system has been disrupted. And I say temporary disruption because all of that, for the most part, will go back to normal. Unless this disruption lasts a very, very, very long time, and then we get used to no coins.
Okay.
So, you know, more than likely, unless we're talking about an extended disruption, once we go back to normal, you can start using your pennies and nickels again.
Well, I appreciate that because you know that if you follow social media, Twitter, Facebook, you know, there's those conspiracy theories out there who are saying, you know, this is the way we could get rid of coins and round everything up to the dollar. So I appreciate your answer. You know, my own theory is that the mint was so busy just printing checks that they didn't have time to print money.
There you go.
So, okay, so, you know, we said that you're the CEO, president of the Federal Credit Union here locally in Manatee County. You know, explain to our viewers, what is the difference between a federal credit union, a credit union generally, and a traditional financial institution they may be, you know, banking with every day?
Okay, well, there are two very large distinctions. One is tax status. Banks are for-profit enterprises. They are in business to make a profit. Credit unions are not-for-profit enterprises. They are in business more so to serve. When you talk about how they are set up, credit unions are membership-based. They are what we call collaboratives. One member, one vote. Doesn't matter how much money you have in the institution, you have the same say-so on policies and the direction of the institution as someone who has considerably more money. The banking model is very different. You know, the decisions are made by a board of directors, and that is determined by investment in that institution. And so the shareholders, those shareholders who have the most money, are going to be the individuals who are going to drive the direction of the institution. I personally think that credit unions and banks can truly coexist because they both serve very, very important functions in our community. You take one out the picture, and I think we as society are going to take a loss for that.
Okay, we appreciate that. For our viewers, today's, if you haven't mailed in your ballot, today is voting day here in Manatee County, so don't forget that. Polls close later on this evening, and you don't want to miss out.
Absolutely.
How has the pandemic created opportunities for online banking and getting people to move towards more online banking resources?
Well, Jenny, I'm glad you asked that question because as an institution, we've been investing in technology, as you know, for a couple of years. Now, getting people to move from how they normally bank to taking advantage of technology sometimes is a challenge, even if that technology allows them to do everything that they want to do much easier. So the pandemic forced us to think about safety for staff, as everyone else is, and so we closed our branch. We have a drive-through so people could access money through the drive-through, but 99% of their banking activities are now having to be done outside the branch. Well, from ATM networks to relationships with other financial institutions where members can go in, becoming a member online, applying for a loan online, engaging with our financial education resources online. The pandemic has moved people to taking advantage of those online resources. The pandemic has proven to us that our investment in technology was a wise one, and has put us in a position where we can now pivot and not only serve our existing members, but now we're in a position to serve other members other potential members who would not normally view us as a viable option. I don't think it's a stretch to say that we're basically a digital institution right now that has a physical presence.
Okay. We just talked about the technology involved, and we also touched, even though in kind of a joking manner, about the money, the stimulus checks, and everything else. How has the stimulus checks affected the deposits at the bank, and how have you prepared? Because we are in a pandemic.
Right.
There are a number of people who are fearful on, can I get to my money quickly if I needed it right away? So how has your bank prepared for that, and what do you see, outside of your bank within the industries?
Well, we were surprised as a result of this major disruption, and I will use that word again because that is what this is. As a result of this major disruption, we anticipated seeing deposits diminish. We thought people would be very active and spending money and doing this or doing that. We've seen just the opposite. Our deposits have gone up. Individuals who receive stimulus money, they aren't spending it. Individuals that are receiving unemployment, they're being very judicious about how to spend it because no one knows how long this is going to last. No one knows the challenges that are ahead. So what we found is that members are holding on to their money. They're being a lot more cautious and careful about originating new loans. And so when I look at our income, we see a significant fall in loan originations, which means that loan interest income is down. But our biggest area is in fee income. First of all, as a socially responsible institution, we are going to be very liberal in regards to the needs of our members. For instance, skipping a payment and things of that nature. We have very liberal policies around that. We don't collect any fees around that. So we have made the decision to waive fees in certain circumstances in order to help our members get through this difficult time. Now, there's been a financial impact. But what I am hoping is that our members recognize that we are in this with them. We started this with people calling, panicking. I'm not going to be able to pay this. And we say, hey, we're in this with you. So as long as you can demonstrate to us that there is a disruption in your income, you're going to be allowed to skip payments for that month. And we originally said that we were going to do that for 3 months. But the pandemic is still going on. It did not stop. So we had to make the decision about how long do we go with this? And you understand there is a potential double-edged sword as you're talking about automobiles and things of that nature. If you go 3-6 months not paying on that auto, it's going to take you longer to pay for that auto. Is that auto going to be functioning at the end? So we're having to make some very hard decisions. We want to today, but we want to be cautious about making choices that hurt members tomorrow.
You alluded to it, and I want to touch more on it during our interview, but about how socially driven the credit union is and how they want to make an impact in our community. But share with our viewers, the origination, how it started.
Okay.
Because some people, who remember Tropicana, but talk about how did the credit union start in the beginning?
The credit union actually started due to the owner, Anthony Rossi, and his generous nature. He had been basically loaning money out of his pocket to employees at Tropicana for years. And then in 1958, he made the decision, let's go one step further and let's create an entity that can provide our members access to. That's why credit unions were created. They were created for a segment of our population that did not have access to commercial banking. Commercial banking was not available to rank and file people. It was individuals who had resources. And so you have this new entity that sprung up, and it sprung up from the employers. Because employers recognized that the financial condition of their members of their employees would impact the quality of work that they produced. So employers back in the 20s, 30s, 40s, in 1958, when this credit union was created, felt an obligation to be directly involved in the financial wherewithal of its employees. I hope to bring that understanding back to the marketplace today. I talk to employers and I ask the question, do they feel that they are a primary participant in their employees' financial choices? And employers most times said no. They said that is not the business that we're in. And then I asked the employees, who do they look to for guidance? And they all said employers. So you have this disconnect. The employees are looking to the employer, and the employer says, that's not my business. Well, whether you think it's your business or not, if your employee has a car that is not functioning properly, well, they may not be able to get to work, and that's going to impact your business. If your employee is contemplating filing bankruptcy, if they can't sleep at night because they are buried in debt, I am here to tell you, there is a concept that's called presentism. We think it's all about absentism. We think it's all about employees not being there. What if an employee is at work but he's distracted, because of the financial duress that he's under? We've built a business model and a product that allows us to offer this benefit to employers to help create some financial stability for its employees. It's a benefit that doesn't cost the employer anything. And so I'm hoping that employers recognize that it takes a village. And we're all in this together. And if there's an opportunity for me as an employer to put my employees in a better position, then I feel an obligation to do so. And I hope employers in our community embrace us as an institution as we re-engage them and share how employers can really help employees. And so the credit union was formed in 1958 to do just that. And here it is, we're talking about 60 some odd years later. And the stories that we can tell about the people who have purchased homes, purchased cars, paid for their children's college, paid for their children's weddings, we become a part of their lives. I have a VP who's been a part of our organization for 33 years. And she's been working with members for that long. We have some members who have single-digit account numbers. A single-digit account number means you were around 60 years ago, right when we started. So, yes, we were created by Tropicana to service employees, and now we have pivoted from that. We became a community charter for a few years and had some success with that. We grew as an institution, serving people in addition to Tropicana. But now we realize that our roots are about serving employer groups. That is what we've done for 67. We experimented for 10 years with serving the community. We will continue to serve low-income census tracts in the community, but our future is tied to adding value to employers.
I know that it's probably been a couple of years ago that you and I had the conversation, because I see it in the nonprofit world.
Yes.
And so, you have employees and you want to be transparent from a leadership position, and you want to share with them the financials. You want to explain to them. And then you realize the part of the disconnect is because they don't even know their own personal finances.
Absolutely.
And you, coming alongside and learning from you, it's being able to share that with employees so they feel empowered.
Absolutely.
Not only are they learning how our organization as a nonprofit runs or our business runs, but then we can see a direct positive influence on now how they can better run their own family households, because they just didn't know. And adults, asking for help or sharing with people that we don't understand is something we don't like to do.
Absolutely.
You talked about, you've got stories from the credit union and how that particular credit union over on 13th Avenue has impacted our community.
Yes.
Starting with a man like Mr. Rossi, who really did just want to provide access to lending, to a better understanding of really financial strength.
Yep.
But over in the 13th area and the redevelopment area that you're in, you really, under your leadership, you have a passion for meeting those needs in our community that maybe traditional banks, that's not their ideal client.
Right.
Why don't you talk about, with our viewers, what are some of those programs that that we're currently offering to make a difference? And then what is your vision for how can we better serve the community? And somehow, to be sensitive, I want you to talk about, something I'm passionate about is the transfer of wealth. And you and I were talking about it earlier, and about how important home ownership is to them. So we'll start with, what are some of the programs you're offering right now, specifically to a community that can't get help elsewhere?
Let me kind of share some of our designations. That'll give you a little insight. We're a community development credit union focusing on building capacity in individuals and communities. We are a low-income designated credit union. That means that we are physically located in census tracts where people with low to moderate income reside, and we have a percentage of our membership that kind of fits that demographic. We are a CD5, that's a Treasury designation, which states that the U.S. Treasury deems us as a socially responsible institution, and they make money available to help us to achieve our goals. And we will be pursuing some other designations to help in regards to that. So we've set ourselves up to be able to build capacity in people. Our focus is growing credit scores. I want to kind of share a story which speaks to how relevant that is. My brother-in-law, he's 12 years older than myself. I married the baby girl. Well, he's a plastic surgeon in Southern California, and he makes a lot of money. And so we have our family functions, and he's quick to break out his credit card because he's the plastic surgeon. He makes all the money. I'm kind of the junior out the group. I'm married to the baby girl, and so I run a financial institution. However, I am not a plastic surgeon in Southern California. So our financial circumstances are very different. On more than one occasion, my brother-in-law's credit card has been denied. And so we're talking about a gentleman who is pretty close to making 7 figures a year in income and is having a problem paying for a family dinner. It's not how much money you have, folks. It is how much money you have access to. So he had compromised credit. And because of a compromised credit, he does not have at his disposal, access to. Now, he has more money in his savings account than I do. Let's be clear. But I have access to much more money than he does because of my financial capacity. So what we try to educate and inform members through introducing them to Credit Connect Now. That's an offering we have to help people understand their credit, help them grow their credit. We have Reliable Ride, which is a transportation initiative allowing people a concierge auto experience. Imagine an individual who has challenged credit who goes to a dealership, he or she's going to be taken advantage of. Imagine you take that same individual, you put them in a process to where we educate them, we introduce them to credit awareness tools, we give them their credit score and analyze all that. We connect them with a auto advisor who is an expert on autos. We pre-qualify the person, give them special rates. They talk to the auto advisor. The auto advisor goes out and negotiates the auto sale on behalf of the person.
So now, and does the auto advisor actually help them in regards to that you don't need a Bentley? I mean,
Absolutely.
So it's about really
Absolutely.
What's the need?
Absolutely. Well, we do some education before we send the person to the auto advisor. Some of that education is informing them on, what they can afford, quality choices, things of that nature. Early on in my tenure at the credit union, we would probably be inclined to say yes if the person qualified for the loan. But what we saw was people were making bad choices. And I came into this, with the idea that it's not up to me to tell this person what type of car to drive. Until I realized that as a person who's financing the car, you better believe it's up to me to determine what type of car this person buys. Because what's interesting is people make choices. When they're choosing a car, we guide them on, this is a better car, this is what we used to do. They choose the car that they want, but as soon as it goes bad, it's, wait a minute, I'm financing this car that doesn't run. And they're upset at the credit union. I didn't choose the car. I was not responsible for you not maintaining the car. All the reasons why that car doesn't run anymore, you're directly responsible, but somehow you absolve yourself of accountability. So on a programming side, we educate people to understand there is no escaping accountability. Now, we all sometimes experience difficult circumstances, but figuring out a way to deal with those circumstances in the long run will pay tremendous dividends as opposed to walking away. So we are here to help move people along a continuum. Now, what we realized was our risk-based lending, you have challenged credit, you haven't done a good job of paying your bills as agreed in the past. Yeah, maybe I'll loan you money, but I'll charge you a higher interest rate to insulate the credit union. Well, as I mentioned before, the higher interest rate for the individual who's already carrying a lot of high interest loans could be the tipping point. A project, so let's get to what we are working on today. We are having some very informed conversations with wonderful institutions in this community. One, if I can just mention briefly, that I'm extremely excited about the leadership that they're providing in this community is Bank of America. Bank of America has a call to action, of $1 billion across this nation, 4-year initiative to move money into underserved populations, and in particular, populations of color. And I am hoping, we are in the discussion stages, I'm hoping they see value in enlisting the credit union as an intermediary in that process where we take the money that they want to deploy in the community, we use that money as reserves, and then we leverage their contributions minimum tenfold. So Bank of America is interested in moving $1 million from their fund into this community. My institution is committed to deploying 10 times that amount in loans directed to the individuals participating in projects that I'm sure your members of Kiwanis are involved with today.
And I love that because you said loans. So we're not talking about giving away money.
We're talking about hands up.
You're handing up, And then essentially what you've created is a double bottom line. You
Yes.
can see the return on the investment, and so hopefully that money goes back into a pool to redeploy
Yes,
and reinvest again.
Exactly.
And as well as, you're helping maybe the small business owner or that person who wants to redo, their entire life, credit. For the last 20 years they've made bad decisions.
They want to purchase a home, put themselves on the right path.
And so, but let's talk about homes.
Okay.
It's at least when I was growing up, my father's an immigrant here, and so first and foremost, it was always owning a home was the first and foremost the American dream.
It's the American dream.
And now being in the nonprofit world and hearing about over the next 25 to 30 years, the transfer of wealth. And I know there's inequity. There's disparity between races. And a lot of that has to do with the transfer of wealth.
Absolutely.
And that people haven't been able, they don't have the 5, the 6 generations of wealth to transfer to their kids or their grandkids. And you were sharing with me that part of that is, it starts with home ownership.
It starts with home ownership. I look at my wife's family. My wife's family is probably 6 generations Floridian. They've always owned. They've owned land, they've owned homes, and they would transfer that home ownership to the next generation. I mean, we are 3 and 4 generations removed, and there's still properties being passed out to family members that allow those family members in that next generation to have somewhat of a leg up. Now, today is kind of challenging and complicated because individuals find themselves, when they do just a raw analysis of how much it costs to rent versus the cost of home ownership, sometimes the number says renting makes more sense. The numbers may say I can get more of an apartment or more of a home renting without the expenses. But that's what it looks like today. That doesn't take into consideration what it looks like 10 years from now, 20 years from now, 30 years from now. That does not take into consideration the increase in valuation for the home, the equity that is being accrued in that home. And so for a lot of people, when they encounter financial challenges, they're able to tap equity in their home to get through it. And that provides them with something that I really love to talk about, and that is low cost capital. We talk about access to capital. The story is not access to capital. The story is access to low cost capital. And so through home ownership, you're able to gain access to low cost capital, and then you can transfer that ownership to your family members and create that wealth. You look at the wealthiest families in this country. They pass their estates on, and so we want to move people toward home ownership. A project we have going on now, Manatee County government has signed on to be a part of our leveraging strategy. They have committed resources toward helping people to move toward home ownership, helping people to move toward expanding their small business, and helping people just build financial capacity. Well, we have partnered with them, and we've taken their $100,000 and we put it in a reserve account. And now we are deploying loans, we will be deploying loans to these targeted participants at below market. So the individual who would normally not qualify or qualify at above market rates can now work with the credit union through this effort and get below rate access. We start off by getting rid of what is bad. A lot of programs add to, we're going to give this person access to this, that, or the other. But we don't deal with cleaning up what already exists. I'm a lender. And what I found is that if I loan you money and you have a bad auto loan, you have maxed out credit cards, it's going to potentially compromise your ability to pay my loan. And so because you have maxed out credit cards, you have no capacity, your credit score is going to be depressed. If I loan you money, it's going to be at a higher interest rate. That cycle that I talked about earlier. This project will allow us to go in and say, hey, you have this high interest revolving debt. Let us take you out of that and replace that revolving debt with installment debt. Person's credit score goes up, their monthly outlay goes down. We say, hey, let's look at your auto. If that person has a quality auto, we refinance it and lessen their monthly payment. If the person does not have a quality auto, we move them from this bad auto to perhaps a new auto. Why do I say new? Because if we're going to move you from your existing loan to a new loan, you have negative equity. Our auto advisor, the concierge service, can eat up some of that negative equity with a new auto. So what does that mean to the person? The new auto is going to impact your finances in 4 categories. It's going to impact your monthly payment. You're going to be paying less in interest because you have a lower interest rate. It's going to impact your insurance. I share this story, and it's an extreme example, but it's true. 2018 Navigator. I drive a 2012 Mercedes, the baby Mercedes. Her Navigator is valued 10 times my Mercedes. We paid more in insurance on my Mercedes. I called my insurance agent and I said, this has to be a mistake. Their response to me is, she has all these security features on that Navigator. I'm looking like, are you kidding me? This car is worth 10 times my car and I'm paying more. So moving people into a...
You sure it's not the driver?
Well, I would like to believe that is the security features. But moving people from a derelict car to a new car with security features, their insurance goes down. And we're pushing up their credit score, so their insurance payment goes down even further. Well, now you're in a new car with 100 miles as opposed to 120,000 miles. I'm going to go on a limb and say your maintenance costs are going to go down. I'm also going to go on the limb and say your fuel costs are going to go down because you're in a higher quality car. Long story short, we reset the financial circumstances. And when we do that, now I can come in and loan them additional money, and I can feel confident that they could pay because I have reduced their monthly outlay. Now, I will say this. This cannot happen with the credit union operating in isolation. We need the Bank of Americas of the world. We need the Wells Fargos of the world. We need the community banks in this community to stand with us. We need the redevelopment offices. We need the economic development offices. We are allocating money in support of these efforts already. We are just not deploying that money in a manner that leverages those resources and move people forward. As someone who's worked in community development, I ran a program that was funded by Governor Bush. I ran a redevelopment agency for 7 years. I've been running a financial institution. I've dealt with a population that I think society has probably did a disservice to. And that is, sometimes when we feel the answer is handout, we all have our guilt. We all look at the lives we've had and see other people and we say, hey, we want those people to have a better life. But as someone who's lived in those environments, I'm here to tell you, the answer is hand up. And I will share one last story that illustrates that. I worked with a small business owner when I was at the Central CRA. We helped that person with their business. When I came over to the credit union, that person came over to the credit union and became a member of the credit union. Person had awful credit. We helped that person improve their credit. They went from a 550 to a 710. They went from no credit to a line of credit, a credit card, a signature loan, a whole bunch of things that they needed to run their business. I walked into one of my loan officer's office one afternoon, and this woman was in the office. She was talking to my loan officer, and she said, you know, your boss, he's a great guy, but I used to couldn't stand him. And I'm sitting there, and I'm like, wow, that's kind of harsh, but I don't say anything, I just listen. And she continues to talk. And basically what she says is an illustration of her journey. She said that I was different. The reality was, when she dealt with me at the city, we gave her money, and she resented us because we gave her money. She came over to the credit union, and she earned that money. And not only did she think I was wonderful, she thought everyone was wonderful. I'm here to tell you, I hadn't changed. I was the same guy. I like to believe that I was wonderful before and after. What had changed was her. She felt better about herself. So this is someone we gave money in one environment, we gave them access to in another environment, and this person was like night and day. That's what I want to do. I want to help people be involved in moving their lives forward. I want to stand in between these institutions that have resources and use my institution as an intermediary, not only to coordinate resources locally. As a CDFI, I can get money from the U.S. Treasury, but my application is not as strong if I'm competing against Suncoast and I'm competing against GTE. But what if I'm competing against Suncoast and GTE in partnership with Bank of America, Wells Fargo, the local redevelopment agencies, the local city government, the EDC? My application stands out. Now all of a sudden we have millions of dollars coming from the Treasury to support our work. So I'm just all about how do we work in concert. You know, my institution, I think, has the ability to serve a very important role in this community. We're not Bank of America, and we don't have an interest in being Bank of America. But there is a population that Bank of America wants to help. And through working with me, we can help that population. One thing I always say is, I understand the lane that my institution is in. And if I can help the rest of this community to understand the lane that we're in and the value that that brings to them, helping them achieve their goals, I think we'll all be the better for it.
Well, I love it, and and we'll close up, and I appreciate your time. But I love it that you said, a community is better served because both exist. The traditional credit union as well as the institutions like yourselves that are specifically looking to make impacts.
Yeah.
And and you're looking to help a segment of our community that otherwise gets missed or it's not the key client. I love the passion that you have for individuals with home ownership. We could have a whole nother conversation
Absolutely.
about, getting people, just like we talked about the vehicles, getting people into the homes. Part of, I think, the disservice that we do to ourselves, even as young people, that as soon as we get out of college, we get our first full-time job, we want the home that our parents are in.
Oh, yeah.
And we forget that the first home our parents were in was that 2-bedroom, 1-bath block home.
Right.
Maybe the 1,100 square foot.
And we discount the fact that, well, perhaps you could have had a better home if you hadn't put all that money into that car.
Yes.
And you hadn't run up those credit cards.
So, and so I really appreciate your passion. I love what you do for our community. We wanted to give you this opportunity to speak because a lot of people don't know, or they're making the assumption that, it's just for members over at Tropicana. That's what they're there for. They cash Tropicana employees' checks, and that's it. And you guys do so much more. And we as Braden and Kiwanis want to help you get that word out that, we're employers.
Can I make an appeal?
Yes.
To employers. It's challenging in today's economic environment to provide the benefits that we want to provide to our employees. Engage the credit union as a benefit, as a no-cost benefit to you, a partner that will help to build the financial capacity of your employees, get them access to reliable transportation, which is a very important thing, help them to grow their credit score, give them access to emergency dollars simply because they are an employee of your organization. These are things that we can do. So if you're an employer and you want to hear how you can enter in this journey with us so that we can provide access to low-cost capital for your employees, feel free to go to our website, Manatee Community Federal Credit Union, ManateeCFCU.org. Shoot us an email, call our office. I would say stop by, but we're not accepting any visitors right now. But we'd love to hear from you.
Well, and talking about that and talking to the employers, how wonderful it would be if you were to help these employers help their employees find homes.
Absolutely.
Because we know that home ownership,
sticky.
Yeah, you get deeper.
Stays.
Yes, deeper roots into the community, a longer life span for employees.
Absolutely.
In institutions where they do have homes.
Well, when you have a mortgage, you aren't looking for the back door. You are someone who set down roots, and you're looking to protect those roots. So we just want to be a partner. We welcome banking partners, we welcome government partners, and we also extend ourselves as a resource to employers in this community.
Well, thank you, Sherod. I appreciate you coming over to the Performing Arts Center, taking over the office for a day, sharing with our viewers You know, really, what is the credit union? Some of the programs. Hopefully, employers and members of Kiwanis have learned some stuff today about financial institutions they didn't necessarily know, that opportunities for their employees in our community that they didn't know. So until we're back all meeting again, we hope that you enjoyed this particular program and how we changed it up. Instead of somebody just speaking at the camera, we were able to with that, we look forward to seeing you next Tuesday at Bradenton Kiwanis during the pandemic via technology. Thank you.
Thank you.